YouTube. This is Dana from NexGen and my co-host, Millennial Mogul Ariel.
Hey y'all.
Okay, today we're going to talk about money management. And before the broadcast, we're doing a live today. Before the broadcast, we had a lot of questions, Ariel. So we're going to plow through these. I tried to put some in order, but we may start seeing some in the comment section. So
I
I'm really
cannot
excited
wait.
about this.
Yes, me too.
Okay, this is the first question. It's actually a very good question. Why isn't money management? Why is money management not taught in school?
Mm.
Well, let me speak from a boomer's perspective. We were taught math in school, but I think that they wanted to make sure that it was backed up by getting information from your parents. And in addition to that, if they really taught real money management, in my opinion, then people wouldn't get jobs.
Mm. Wow.
So why do you think?
I personally believe that it is one what you just said about people not getting jobs, but as well as formulating a system of sometimes of dependency. I do remember like having that. I believe when I was in high school, like we had, it was a very small portion of how to pay a bill or how to pay something of that nature, but that was the extent of it. So I really think it's because one, it might build like a whole cycle of not being financially stable as like an adult or coming into and wanting not to be able to be in debt, those type of things. We're taught to be in that, and so to teach the other way around, like that's a whole nother. So I definitely think it's not taught because it's a different cycle, it's a different system. It's not what we've been raised up in, or or the norm.
So I guess the deal would be that it's up to the parents to teach their kids or to have it to where they have the information accessible to learn about it. And we definitely have the tools for that.
Exactly.
Here's another question. I think is another good question. What is the difference between gross and net income?
I'm gonna let you take this one all the way because we're on Generation Wealth now, So take this one, Auntie. Okay, help us, help the
Okay.
millennials.
Okay. Well, gross is just that. Gross. It's the amount of money that is what a person will get paid before taxes and other items are taken out. If you're a person that's a W-2, they have Social Security, Medicaid, medical, and if you have a 401k or if you have a thrift savings plan, those types of things are. And we have Damon on the line. How are you, Damon?
Hey, how everybody doing?
Good. Hey, Damon.
Okay, so we have
Hello.
the boomers represented. We have Damon, who is Generation X, and we have the millennials. So the question on the table is, what is the difference between gross and net income?
Well, I think you summed it up perfectly. I mean, to be honest, it gave me a clear answer of what gross and net income is. I can't get that. You can't get that misconstrued.
Right. And if you're a W-2, and this is what's really interesting, is that when people go for loans or if they ask you how much you make, you always give them the gross amount. You never give them the net. Now, if you have passive income or you have portfolio income, then, and which we'll be talking about in a subsequent video, the um, gross income for a W-2 is heavily taxed and they take other things out. So between the thrift savings plan, the 401k, the medical, the state and federal taxes. Those things are what's the difference between what they tell you you're getting and what you actually get in your paycheck. And I think what people misunderstand is that when they're doing their budgets, they should be doing it with their net income. Did you want to
Wow.
add anything on to that, Damon?
No, that's actually perfect. Usually that gross income is that big number. The big number we always look at first. And then after it gets chopped up, uh, split up and cut in half and everything else, whatever falls in your hand being your net, that's all you right there.
And this is a great segue now that Damon is on the line because out of the three of us, he is married. So, Damon, should money management be discussed during serious dating or before marriage?
I would say just serious dating, just to get an idea of what level that person is on, where their goals are, where their head is, what they're thinking about, what they're thinking about right now, what they think about the future. I think serious dating, once it kind of goes in that direction, I think it kind of opens up for all of that because being on the same pathway and the path as far as goals is important also. Some one side might be in a different stage in their life where they're more materialistic and spending and vacation and this and that, and the other one may be, well, I need to save and plan for my kids future, my kids future, or something like that. So I think it's a very big thing.
Miss Ariel, did you have anything on that?
I
You did.
think that is an amazing answer. I definitely agree with Damon 125%. Definitely it should be talked about because as he said, you want somebody on that same page with you. We don't want somebody over there spending above and beyond and then the other person is trying to say we're not in agreement. We're the scripture says how can two walk together unless except they agree. So we got to agree, especially with the money. All right. So that was a perfect answer.
Also, I would like to, if I could piggyback on that, you also would need to know if they are giving their money to their extended family.
Mm, that's
Hmm.
deep.
Like they may be in a blended family. They may be having other children. They might have children from previous relationship or previous marriages. They may be sending money home to their parents, which is nothing, in my opinion. There's nothing wrong with that. It's just something that you really should know before you get into a serious relationship, and definitely before you get married.
Yes.
Right. Absolutely.
Because we don't want Mima getting upset because she didn't get her regular check. If that's a decision that I think you both should be making.
Yes.
Yes.
Okay. Now, segueing to that, why is tracking expenses or developing a spend plan, aka budget, so difficult for people?
Ooh, we are a consumer driven society. We consume. We have been meant to be consumers. It's so much better to spend than to save. Like what is that? Save? No, I don't want to do that. Like that's a horrible word. But and wanting to be not lawless, I guess I'll say, with that of your funds and of your finances, it's much easier to be like, oh, I'm gonna go here, I'm gonna do that. I don't know. It's just I'm gonna give my whole personal whole moment of truth. You like $20 can go quick if you don't realize that you done went to Chick-fil-A and then you done went somewhere else. And then you're like, wait a minute, I had $20. What happened? And then it's gone just like that. That just is an example of even the small things of your eating out. Like if you we gotta keep track of it. Okay. That's so y'all pray for me. That I don't keep spending this Chick-fil-A and leave those money. So yeah, so it can be hard, but this is why we're here at NexGen, so I can get help.
Mr. David?
I would say the same thing. Like just what she said. That word budget scares so many people off and scares people, and but it shouldn't, but it does. You think budget, you think you can't, you think limits, which is shouldn't you shouldn't think that. If you put everything in the budget and you plan for, okay, I may blow $300-400 this month. If you put that in your budget, you can still see everything. Like you said, it's good to see stuff, and like when you driving, looking at your gas tank, you see your gas going all the way down on E. You got to see that stuff, and the same with your bank account. If you see it, you can kind of adjust yourself and maybe not spend as much. But that word budget is definitely a I guess we look at it as a bad word somewhat. But I think especially in younger age, we look at it like that. But as we get older and start seeing things and looking at things a different way, we sort of come to it and start developing that plan. But it is very hard when you're young. Like you say, we are consumers. We want this, we want that, and we want it now. Um,
Yeah, that's a very good analogy. And you talked about that, and then I'm thinking the other thing that people don't like is they don't like accountability. Besides the fact that they don't like to, what is that word? Delayed gratification. That's the word that I always had a problem with. I had a problem remembering the word, but we want it now.
Yeah.
And with a budget, it actually does. People don't realize when you do a budget, it actually tells you what you can do, not necessarily what you can't do. And I
That's
think
good.
once they look at it that way, I think it might be a better way. But it's just one thing that I think is important. And like you said, Dave, it's a roadmap. How do you know how much gas you have in the gas tank if your needle is broken? You're going to sit there and run out of gas and wonder why. Now we have this segue. Why is it important to keep up with the Joneses? Miss Ariel?
Who are, first of all, I want to know all my years. First of all, who are the Joneses? I've never met them. I want to know who they are. That's the first thing. But it's you should be keeping up with yourself. I know that we're as well as we just said, we're in a consumer driven society. We're also in a society that is always looking through social media, through outlets, through looking at people. It's so easy, like, and so you are the Joneses. Keep up with yourself. I mean, I mean that's really how I feel. I know I like nice things. You can have all the above, but if you like it, you like it. Now, mind you, I'm a whole clearance girl. People wouldn't know. The clearance rack is my favorite store. Marshalls, all of the above, they're it. So for me, I never felt like I had to keep up with something that to me was fictitious in the first place. Whoever you're supposed to be, go ahead and be just that. You don't have to keep up with them. Do whatever you want to do. Stay in your lane, but don't feel like you have to keep up with somebody to impress people that might not like you in the first place. So
Very good. Mr. Damon?
for me, I always like to put things in different stages because for me, I know we definitely grow and you learn a lot. So you start looking at life different, looking at different things different. So early on, yes, I still don't know who the Joneses are, but early on, teenage years, I wanted to wear whatever they was wearing and get whatever they was getting and buy this and buy that. So it was at that age, yes, it was definitely a problem. But like I said, that growth as you go through the world, you see different things, you start to learn, you get to know a big difference between needs and wants.
that's good.
Tell my two daughters all the time, there's a big difference between what you need and what you want. And that's one thing that once you learn that, it definitely you see things differently. You don't even want to worry about the Joneses no more because it's not what you need. I mean, it's not what you. Yeah, it's not what you need.
That's good.
Yes, the Joneses are fictitious, and we want people to have a vision of us that may not necessarily be true. We're not going to run around with our bank statement saying, see how much I have, see how much I'm worth, but I can drive that BMW. I can drive that Mercedes. I can give you the illusion that I'm successful. So I am the Joneses. I am the person that everyone wants to be. So the Joneses are fictitious. Got another good question. Why do you believe the media influences your spending habits? Oh, excuse me. Do you believe that the media influences your spending habits and attitudes about money, and why? And when we're talking about the media, we're talking more than just the television. In the boomer generation, we had the television and we had the magazine. We had the Ebony, we had the Essence, we had Soul Train. We had everyone showing us these are the things that you need to have to be successful. So I'd love to hear your thoughts on that.
I definitely say that the media influences our spending habits, and as well as our what we feel about money. I was looking up some things earlier as it concerned my business, and I was like, let me. I was scrolling on social media and saw that Beyonce her new set of her line came out. And I was like, let me go online and see what this looks like. I don't have any Ivy Park with this. I feel like I don't need any Ivy Park. I like Ivy Park, but Ivy Park money and your dreams and goals and visions are two separate things. So I literally went and looked, and almost everything was sold out. You're talking about something that costs at the beginning of starting at 100 and something dollars for, a pair of leggings or whatever it might be. So influence to literally say, oh, you got to get this right now. Oh, this is coming out right now. So, now you got a whole set of sold out people for the Beyonce fans. Don't y'all come for me. I like her too, but I'm just saying that it was an influence because of her. Now you're spending money whether you have it and or you don't, but you're spending money for a name, for to say that I have something of that. Now I get it, it's all good, but I definitely think that it influences how we are. And as far as Damon even saying with his daughters, how he's talking about your needs versus your wants. We need food, you need shelter, you need, those are needs. But a want you might want that Ivy Park or whatever the case might be, but you don't need it. So I think that's a great segue of having that influence and knowing what your needs and wants are when you have to cut things off and know the difference.
For me, I'm going to say absolutely. I think the social media has turned into the Joneses. Pretty much, you want to say it that way because again, it's what we see. It's what's being put out there daily. Get this, buy that. This will make your life easier. This will make your life better, and we kind of fall into that. And again, it goes back to needs and wants. Do you really need it, or do you just want it? So I would definitely say, yeah, it's a very big influence. Your habits, we're always looking for a way to make things easier also. So that's another way that social media influence us. If we can buy this and make dinner prep easier or something like that, we're going to go out and buy it. So yes, it definitely, social media is a big one.
The other thing that I saw is because we are um, pretty much in the house and the okay, when I was a boomer, you either had magazines or you had someone coming to your door. And nowadays, we don't open the door to anybody. So they found another way to get to us. They have the media. And now that we're pretty much in the house during this time, we are a captive audience. So we have to know to have the discipline to be able to say, hey, we're not going to be an Amazon warrior. We're going to be mindful spenders. Okay. What are some bad money habits?
Whew. Oh goodness.
I would
Whew.
say bad money habits is pretty much a couple of things we just talked about. Buying stuff you don't need, trying to keep up with the other folks, and
Mhm.
you really don't need it. Also, I'm gonna throw in there not having a budget, not being on the budget, spending outside your budget.
Mm-hmm.
I would say definitely some bad money habits right there.
Totally agree. Definitely, totally agree.
Yeah, I think we pretty much hit it off about the things that are bad money habits. So we're gonna switch gears because I'm thinking um, one of the bad habits that we have is that we are not financially literate. And so I'm going to switch gears to talk about some of the places that get our money.
Awesome.
For example, what is the difference between a credit union and a bank? Now, I can go ahead and take that one.
Take it.
Take it. Okay. Um, the credit union and the bank have two customers. The bank's customer are their shareholders. That's who they're beholden to. Where the credit union, their members are the shareholders. And the credit union has perks that the larger banks don't have. And because their members are the shareholders, if you will, the partial owners, the credit union can offer better rates, better deals. It depends on which one you have. There was one credit union that everyone killed to be a part of in the late 90s, actually 80s and the 90s, and now they've opened the doors to a lot more people that can be a part of that credit union. The downside of the credit union is that the membership is restricted, where it's not restricted in the bank. So for me, that's the difference between a credit union and a bank.
Good stuff.
Did you guys have anything else?
That was eloquently said.
Yeah, that was definitely perfect. I was gonna say the same thing. Credit union, that membership, get a little bit more things. You're trusted a little bit more as far as a member of a credit union. You're known a little bit more to that credit union, a little bit more personal, I think.
I do have a quick story for you that happened to me in the 80s. Of course, I'm a boomer, so give me a little slack. Um, there was a situation where one of a check had gone in, and it would have made my account overdraft. I just happened to be across the street. One of the tellers picked up the phone and called me and asked me to put money in my account so that it would not overdraft. I doubt one of the big banks would pick up the phone and call me to tell me to come put money in to cover that check. So we have another question. This one is kind of near and dear to my heart. What's the difference between a debit card and a credit card?
Well, I feel as the founder of NexGen, unless Damon, you want to take it, that one, hey, you want to.
Well, Dana says near and dear to her heart, so let's go ahead.
We'll let her take it. Well,
Okay, teammates. All right. Dana is not a big fan of debit cards.
okay. Tell us why.
To me, okay. To me, the debit cards are the electronic version of a check. Now, you will hear some of these gurus say that you're not responsible to have a debit card. Excuse me, you're not responsible to have a credit card, so you should have a debit card. Well, if you're not responsible to have a credit card, the debit card can do a lot more damage. The debit card takes the money right out of your account, and it doesn't report to a credit bureau. To me, it's just an electronic version of a check. What say you guys?
I'm
like it?
No, I never heard it that way. So I'm over here like taking information in because I never heard it that way. That's interesting.
As far as me, that was my understanding of the big difference. As far as a debit card, it's coming directly from your account immediately.
Right.
Yeah, that was my biggest thing with it. So versus the credit card, you might see it a little bit later.
Okay, I'll give you um, the reason why I said it. Again, a lot of the financial gurus are out there saying, no, no, you shouldn't get a credit card because you'll just overspend. I'm like, well, you probably can do the very same with a debit card.
Right.
The challenge is that the debit card is not forgiving and they don't report to anybody. And you actually can draw up fees. And that is, I should have said, that is another bad money habit, is that people take on fees that they should not be taking on because they did not do a spend plan and they don't know how much money they have. For
Mm.
example, they could, if they bought something, let's say for something that costs $1 could actually cause them to overdraft to a tune of maybe $150 in overdraft fees because of the way the banks set things up.
Mm.
And that's with a debit card or taking money out of your checking account. It's different than if you had a credit card. That's just my personal beliefs. If you're irresponsible with a credit card, you're probably going to be irresponsible with a debit card. So basically, get the same habits so that you're responsible. That's
That's
my take
good.
on
That's good.
Mhm.
it. Okay. What is the difference between checking account, savings account, money market, certificate account, excuse me, certificate of deposit, and investment accounts? Guess that's on me, right?
You're the guru. How fun.
Mhm.
Let's say that you have direct deposit. Direct deposits can go into your checking account or your savings account. And you usually a lot of the monies or the bills that you're paying would come out of your checking account. And it has one of the lowest, even though that's where the majority of your money would go in the beginning, it has a nominal rate. And what I mean by rate is that the longer you keep the money in, the higher the interest rate would be. However, I think the financial institutions know this is what you're going to be paying your bills out of. So then we have the savings account. The savings account you may see a little bit more as far as getting interest because your goal is to take your checking account money or take the money that you earn and move it into your savings account to save it for something, save it for your emergency fund, those types of things. So the money market, excuse me, there may not be a minimum required for checking. There usually, for the credit unions, there's usually a minimum amount of $5. So that, now for money market, in a lot of cases, the money markets, they have a minimum that you have to keep in there. And it usually ranges from $1,000 to $2,500. So as long as you maintain that minimum, you can receive a better interest rate of the money that's in that deposit. The difference between the money market and the savings is that the savings may require that you only keep $5 in. Another thing about the savings in the money market is they are restricted by law on the transfers that can come out. And I believe the number is six. In some institutions, they've changed it for this year, but in most cases, you can only do transfers out of your savings and money market 6 times. Now, what's good, the difference between money market and certificate of deposit is a certificate of deposit is another savings instrument that you can use, but it's usually giving you a better rate the longer you keep it in. Now, some certificates of deposit don't allow you to put money in. Some do. So what happens is they have a set amount that you put in as a minimum. And that's what they would pay the interest on. Now, they will say, okay, for the money, the interest that you get on the certificate of deposit, do you want that money to go into your savings or your checking, or do you want it to roll back up into your certificate of deposit? My recommendation is to roll it into the certificate of deposit because that interest rate will be based on the new principal. And in a couple of weeks, I want to say November the 13th, we actually did a video on the types of monies and how the money would flow, compound versus simple interest, if we haven't done that already. No, I'm sorry, that already happened. We already did the difference between a simple and compound interest. So that's one way you can do it. Certificates of deposits range from 6 months to, in some cases, 7 years. So basically ties your money up for 7 years. The difference between all these accounts and an investment account is, in investment accounts, all of your money is at risk. But in some cases, you get better benefits for it. So if you look on the bank and the credit union on their website, when they talk about investment accounts, there is a disclaimer about the risk that you have when you put your money in those types of instruments. Now, I think it would be a really good idea if we can get someone in as a guest speaker that is from either the bank or the credit union that can come and answer questions about that. Okay.
Question.
Yes, sir.
On the CDs, how long does it take before you are trying to reinvest back into it? Because you say your money is it what, 6 months, or is it annually as far as the return, and then you put it back into it?
It depends on the CD and how it's set up. For example, Navy Federal Credit Union, they have 6 month CDs and they have 7 year CDs. So for a 6 month CD, the 6 month CD is held for 6 months. And if you take the money out before it matures, then you actually pay a penalty. And you also pay a penalty if you bought the CD for 7 years and you took the money out before the 7 years. It's kind of a sliding scale on the 7 years. So if you say, I want you to take the money that I get in interest and I want you to roll it back up in the certificate of deposit, then you will have what the amount would be after either the 6 months or the 7 years, or however long you kept that purchase that certificate of deposit for. Did I answer that question?
Yes, ma'am. Absolutely.
Are you sure?
Mm-hmm.
Okay. So like I said, if you go on the bank or the on the credit union websites, you can actually use that as an instrument for, if you have a wedding, a special event. I use it for things that I know is going to cost me money in the future. Money markets, I use that for emergencies. So it depends on what you want to do. Okay. What is payable on debt? Okay. I guess I got this one too. Okay. Let's say that I am a primary holder and I decide that I want to put my daughter on as payable upon death. When I pass away, the money will shift over to my daughter as the new owner. She does not have anything to do with that money, any control over that money until I pass away. And I don't even have to do a will for it. I don't have to do a power of attorney for it. I can put anyone's name that I want on the payable upon death. My recommendation is you put a payable upon death on all of your accounts, because the bank needs to know, the credit union needs to know what to do with the money when you pass away.
So it's like a more formal will, something like that.
Well, what it actually overrides the will. So if something should happen to you, the person has access to that money right away. It's not a probate issue. You've given instructions to the financial institution that that person is to get that money upon your death. All they would have to do would be to show your death certificate, and the money is transferred to them.
Wow.
Okay.
And this is important if you're married. If you don't put your spouse on your payable upon death, if they're not the joint owner, they're not going to be able to get access to that money unless it goes through the probate process. And that's why it's important to talk to your financial institution about putting payable upon on death on all of your accounts, because you don't want to wait until something bad happens to do it.
Right.
Okay, well, that's enough on the banks. Should you know how to complete your income tax return?
Yeah.
Um, Completed. I'm kind of back and forth on that one. I think we should know the ins and out of it, know some things about it. But as far as completing it and turning it in, I think that should be left to the professional.
Well, let me ask you this. If you have a professional that does it, who's ultimately responsible?
You are, it's your taxes, but that professional institution usually has some type of insurance on it also if they do get it wrong.
That's true, but it's based on information that you give them, correct?
Right.
Now, don't get me wrong. My personal opinion is if you don't feel comfortable preparing it and you need some assistance, definitely get that assistance. The challenge for me is that when you go to someone that's a professional, you're usually seeing them after the tax year. So, for example, a lot of people, when I ask them why do they have a mortgage, the response is because they get a tax write-off. And that's, I don't really think that's the true answer. But if they were concerned about a tax write-off, if they go to the next line below, maybe one or two lines below, they have charitable organization right there. You get the same tax benefit by donating to a charity. So that's why I think you should know how to do it. I'm not necessarily saying you have to do it. The other thing too is that people are paying money to have their taxes prepared when they don't have to. Because if they make a certain amount of money, the IRS and some of their organizations will do it for you for free.
Oh.
I believe it's 68,000. Okay. The next question, guess that wasn't popular, was, and this actually talks about the taxes as well. What is the difference between a donation, as far as taxes are concerned? What are the difference between the donation, gift, and investment?
I would say donations are voluntary. Gifts are can be for something specific. Investments, you're looking for some type of return.
Very good. Miss Ariel?
Well, I could not have said that better myself, Damon. Okay. I,
David's on it tonight.
he's on it. He took the words right out of my mouth. Okay.
Okay.
That was it.
Okay. Now, I'm getting ready to poo-poo on the party, so here you go.
Uh-uh.
um, and this is going to be important because when people ask you for something, they use specific words because the federal government requires them to. Everything that you give is a gift.
Okay.
And with a gift and a donation, you should not expect anything in return.
Okay.
When you give a donation to a business or a company that's a 501c3,
Mm-hmm.
you can take a deduction for that. I would go to the IRS site to make sure that they are who they say they are.
Mm-hmm.
With a gift, if you go over a certain amount, you have to pay what they call a gift tax. There are some exceptions, and one of them is a donation to a 501c3, or what have you.
Mhm.
Again, that was why I said it was important to know how to do it. Not to say that you had to do it, but you had to know how to complete the tax return, because you would know that if I made a donation to this particular company, how would it help me as far as my finances is concerned? With an investment, you are expecting something in return. However, you have to be ready to lose everything. So when you make an investment, you need to be told that you could lose that investment.
Okay.
Any questions on that?
No.
Okay. This is a fun question. Switching over to getting off of, it kind of goes with taxes, but kind of not. When should you start a family? My little tax deductions. My friend's father, he had a saying. I'm not going to repeat it because it's kind of crass, but it was basically along the lines of have children, start a family when you're ready, when you can afford to. So I think that we were told when we have children, each one of them is $250,000 over their time between their birth and their um, graduation from college, if they go to college, or any post high school graduation, $250,000.
Yeah, that's about right. I don't
Okay, thank
know.
you, Damon. You're our family man. Any thoughts on that?
I think that 250,000 is a little bit more when you have girls.
Oh my, oh my.
Wait a minute. I think I feel some type of way.
In
Thank
a
God
good
I have
way. In a good
grandsons.
way. In a good way. I have two of them, so
He might be right.
He might be right. Listen, I'm an only child, so I guess. Listen, he probably is right. He probably is right.
I had three gowns, two for the prom and one for ROTC. So I think you're right, sir. I didn't rent those.
You- I think he's right. But just as how, Damon said earlier about how we were talking about as far as it related to, marriage and starting a family, all that stuff like that. Once you have that down, then in turn now we can be able to answer that question of the when. Because I can only imagine. I'm the single gal on the panel, not married yet or any kids yet, but I have two awesome god kids, and I was like, man, golly, I don't know what's gonna happen when I actually have kids, because I'm like, I'm always getting for them. So I'm like, I can only imagine, but we gonna take we yeah.
I know their parents love you.
Oh, listen, I'm Auntie
mhm.
Ariel. I listen. That is my name, and I guess I'm gonna stick to it. I'm the favorite auntie and favorite godmommy and all that good stuff. So, whoosh.
Okay. Well, with that goes, if you have a family, is life insurance and estate planning necessary?
Yes, I would say
Yes.
yes. But what
Wow.
if you're single? Would it not be just as
Okay.
important?
Okay.
No, I'm just asking because now
Oh,
now I'm over here for information purposes. So is would that be the same thing? You know,
maybe not to the extent of Damon, but I would think you would do something. I mean, if nothing, your POD, letting
oh,
your parents know your wishes. Yeah. And I think the rule of thumb, and correct me if I'm wrong, Damon, is that if there's no one that is relying on you for income, then the life insurance is pretty much something that you um, really shouldn't be considering. However, however, I found that the younger you are when you get life insurance, the better the rate. Because
Mm,
we kind of got life insurance when we got into the military, right, Damon?
right. It's definitely a must. Life insurance, your will, all that stuff is a must, and it's on file and it's kept up regularly. I think we did it what annually in the military, so that is definitely kept up
Yeah.
with while you're in the military. But it's definitely important because you definitely want to make sure your family's taken care of um, when you're gone. Um, Not a lot of issues if everything has already been talked about, written down, planned out, and put on paper, pretty much.
The other thing I would recommend with life insurance is that if you can, do it as young as you can. Um, don't have health challenges that are preventable. For example, there's a higher rate for smokers, and I wouldn't even try to play the game with the insurance people to tell them that you're not a smoker when they know that you are. And also, if you have other health issues that are preventable, like for example, being overweight, having high blood pressure, diabetes, things that we can prevent, I would recommend getting those taken care of as soon as possible.
Mm-hmm. It's good.
Okay, which is a segue to how does physical wellness affect your financial wellness?
Ooh, like you just said, in any way, because if we're not physically well, then we're paying, for medication. You just gave, then you're going to the pharmacy, then you're having to pay outrageous prices to be able to get medicine that you then in turn have to be dependent upon. So that affects your financial wellness, because then that takes away maybe from something else that you could be doing with your finances. So it definitely affects you. uh it can affect stress wise. I mean, so many different aspects can physically affect your finances, because then if you're stressed out or something happens or things like that, that can trickle, it can be a trickle down effect.
100% agree. Like Ariel just said, if when something does happen and now all of a sudden your mind is focused on getting yourself back healthy, going to the hospital, then you got physical therapy, then you worry about all this stuff and you're not out there doing for your family or making the money like you was before. It takes you completely off track because also know on the back end you're going to have some medical bills coming to you too.
Hmm.
Right before I retired in February, one of the things that I did was I actually had all my dental work taken care of. And I didn't have a lot, but I noticed that it didn't cost as much when I did the preventative care, because of some of my family members had to have their thank goodness they had the money for it, but they had to have extensive dental work that cost them a lot of money.
Mm.
And if they had taken, and they always say, if they had taken care of it in the beginning, then this bill wouldn't be so large. For example, if they had sugar on their teeth too long, if they didn't do the appropriate dental care, if they smoked, it really wreaks havoc on your wallet. I could not tell you how many cigarettes are in a cigarette pack. I couldn't tell you how much cigarettes are, but I know the cost on the back end.
Mm.
Hmm.
Mhm.
How much should you have in your emergency fund? Now, I know that's different for everyone, so please share what you think on your based on your circumstances.
Mhm. Oh, rainy day fund. I would say maybe 5 to 10,000. Just a guess.
Hmm. I would say, like you said, it's everybody's different depending on your situation. But I would say your living expenses for the month. Make sure you add that up and go out at least, let's say, 3 months, 3 months worth of living expenses.
Okay. Um, I have been through at least 3 furloughs and now one pandemic, and I have found that the more money you make, the more months of limited expenses that you should have. So I would, if you're starting out 3 to 6 months, but I would grow that to at least a year. And the reason I make that recommendation is because you have to, you might run into a situation, which goes into our next question. What would happen if you lose your job?
Mm. Be a tough one if we don't have anything saved up.
I think I hear some background in the, does somebody hear something in the background?
I do. I do hear something in the background, but I don't know.
Like I said, everyone is different. So I guess instead of, it depends on your situation. Mine is different because I don't have a job.
I would say, as far as losing your job, that was one of the things why I kind of focused on finishing out my career in the military, 20 years. That's so that was something that I could at like a fallback. So that was one of the reasons I definitely focused on finishing out 20 years in the military for that reason right there. What if happens if you do lose your job or you don't have that income coming in? So I have that at least at a minimum. I have that retirement coming in. So I kind of made up my mind on that very long time ago.
Thank you for your service. So I think that based on what you're saying, multiple streams of income is the way to go.
Right. Exactly. Exactly. So like I said, that retirement is always my backup. I'm focused on trying to get at least 7 streams of income. So you have different things to fall back to.
Did you have anything, Miss Ariel?
Oh, I'm good. Sorry, guys. That was me. I don't know what my computer was
That's
having a
okay.
moment.
Happy to have you back. Yeah, so I think what Damon and I, the conclusion we've come up with is that if you should lose your job or lose one of your streams of income, you do have backup, and that should be part of your money management. Is
Yeah.
that the consensus?
Yes.
Absolutely.
So I guess I don't need to put this one up.
We answered it. Y'all
Mhm.
answered it.
Okay. This next question is not applicable to everyone, but I thought that we should have a conversation about it. Should you help with your children's post-high school education?
Yes, absolutely. I would say yes. One main reason I looked at is you always want your kids to do more than you did or and better than you did. So one thing is to help them financially is so they won't start out with debt, being in debt of all the school loans and all that. So I because you want them to start out a little bit more than what you had. So I would definitely say yes on that one for me anyway.
Okay. Miss Ariel, what do you say about that?
I would say awesome job, Dad. Listen, I'm not your child, but I know your girls are like, thank you, Dad. Appreciate all of that. Okay, I think that's an amazing answer. Just as Damon said, to be able that way they don't have to go into debt. They can be able to pursue their career, that they want to without having that over their head, as it relates to financial, all the extra stuff. So I'm definitely here for parents, grandparents, family, all the above, being able to bless the children. Okay, help them out. They want to do their dreams and their vision and not have any debt. So I'm definitely here for that.
Okay. Now, you notice the question didn't say college, it said post high school education. So for me, um, if I'm going to foot the bill for it, which I think that I should,
Hmm.
is that I have to make sure that it's paid. It's that I get what do you call it? Return on my investment. If I'm going to pay for my child to go to a post high school, if I'm paying for it, we're gonna make sure you finish,
Hmm.
Oh
or
yeah,
I'll just pay one semester at a time, just in case you decide that's not something you want to do.
right.
But I'm pretty much hands on if I'm paying for it.
Understandable.
Okay. What is the most reliable way to pay off debt? You don't want to hear my answer, but I'll make
Okay.
mine last.
I would say keep up with it. First of all, um, back to budget. Put it in your
Okay.
budget. Put it in your bills plan. Make sure it's in there, and have a way to track it as far as not just when your bills come in, but you can look at it and see it go down as you're paying it, and you can forecast. Okay, it's January now. I have this bill paid off in December. For me, it helps me. I definitely like seeing things, and I can adjust, and I see it, and I work better when I see it. You see that debt go down, or you see where your money's going with that budget again. Back to the budget, but it definitely helps me. It works for me more better. I'm a little more hands on. I definitely like seeing where it's going.
Miss Ariel?
I would definitely agree with Damon. Also, I guess I would say to sacrifice that probably,
Mm.
in wanting to pay off debt, we're gonna have to give up something. You might have to give up, your Starbucks, or you're gonna and make your tea at home, or whatever the case might be. Maybe small steps that will then lead into major steps, or not eating out, or whatever the case might be. So that way, in another season, you can pay off the debt that, ultimately that we don't want. So I definitely say, I agree with Damon between the budgeting, looking at what you're doing. And then I would definitely say sacrificing in another season so you can get your ultimate result, which is being debt free.
My answer is when I came into the military after I just turned 17, and I started at zero, and I went in and I went down from there. So my answer would be is I knew what it was like to be in debt. I didn't like it. So my subsequent generation, the best way to get out of debt is to not be in it. That's for subsequent generations. I've learned from my mistakes, and I'm able to teach it to subsequent generations that debt, Dana's personal opinion, there's no such thing as good debt because you will have to pay. And if you don't have if your only way to pay is through your sweat and tears, that may be a problem.
Mm.
Okay. Should you have a fund or account when you're wanting to get out of debt? That's a good question. I think I think yes. That way you can look at it and see it go down, and it does something to your ego. I think it does something to your psyche.
Yeah, I definitely agree. I would say yes. Just like you said, Auntie, so we could see it. Uh, like that way we're not getting off track. We're staying the course. And not making those, haste purchases, or having those moments of feeling like you have to get something. So definitely.
I would say yes. Same way, tracking it and accountability, and you get a little happy when you get halfway there. You see that light at the end of the tunnel. You get that bill almost paid off. Get happy about it. Start thinking about what you're gonna do with that money.
Yes, sir. You're right about that. So, okay, so we're thumbs up on the get out of debt fund. Got it.
Yes.
Okay. What are some tips for properly managing your money? Because we're coming up on the holidays, so you don't find yourself in any debt. I'm going to go back to don't put yourself there, but that's just me.
She put a period right there. Don't do it, and that's it. She dropped the mic. I
Mhm.
would say that maybe one or two tips. I completely agree with you, Auntie. I would say that as well. Um, I would do the most. I am one of my languages. I love giving. So I'm a giver. I love giving. I love to see people's faces. Like, I love that. But as you are learning and growing, we're getting out of that. We're making wiser choices, all those things like that. You're being wise with your spending. So I'm just gonna tell you, Merry Christmas, Happy Kwanzaa, may the Lord bless you, Happy Thanksgiving, all of the above, and just send you a text and maybe a $5 cash app, maybe, for you to get some coffee. But I would give with the important people in your life. If you're, and gifts are not everything. That's completely, they're not everything. But if you feel like you want to get somebody something, I would definitely say stay within a budget. We just talked about that budget. Stay within that little budget. If it's Secret Santa, it's $5 to $10. Don't go on 15. Stay in your $5 to $10. And then also, between getting maybe just a certain person's gifts, I would definitely say, and I don't know because I'm on NexGen, so I don't know how y'all feel about layaway. I don't know, but if there is something pertinent that you really want to get your child or something of that nature, we probably should have started. We had this conversation maybe like last December, or last January, when all the stuff was on clearance and sale. That way you're not, taking funds out of something else. Don't give Santa Claus all your money, okay? This year, that's my take. Don't give them all the money, because the children gonna let the toys go in about 3 months anyway. So put it into a college fund. Let them get something else out of it besides a toy. Let's build that generational wealth we're talking about.
Yes, completely agree. I'm gonna say give with your heart and not your bank account. Um, Back to also budgets and needs and wants. Maybe you can't give everybody a gift this year. Like Ariel said, send them a text, write a poem. It works just as well.
I know that's right.
Of course, I, as a boomer, have a different spin on it, as I always do. And I will tell you, I have friends that, I guess, what do you give someone that has everything?
Hmm.
I think this kind of makes me a little emotional. Friendship, love, a phone call, a card.
Hmm.
You can have all the money in the world, and it doesn't mean anything. Just ask someone taking their last breath, and I can say that.
Hmm.
So
So
during
good.
the holidays, this one in particular,
Hmm.
I am very grateful for you. That is my gift.
I love it. That's a good gift.
And really, if you things are not it, the only people, in my opinion, the only people that benefit from things or other businesses. I'm telling you, that's my opinion. Hug your family, love them.
Mm-hmm.
That's their gift.
Yeah.
Okay, off my soapbox.
It's all good.
Mm-hmm.
Is your credit rating important? And if so, why?
Hmm. I would say yes. But then I guess I would need a little bit. I would say yes, but explanation.
Okay.
Ooh.
Now, see, Damon is he's a business owner where credit rating is important. So I'd love to hear what he has to say about it.
100%. Credit is important. That rating is important. That's a very important number. Even right now, I'm still understanding and learning how precious that number is and what it can get you and what it can't get you. But it opens the door for a lot of things. It shows the stability. It shows trust. Shows that you pay your bills. It shows that you are financially stable, I guess. So yeah, I'm gonna say it is definitely important. And then I'm a realtor, so as far as real estate, that's usually the first things I go with my clients. Is their credit score, their credit worthiness, because that's is the first step to getting an application, getting that mortgage application. That's where everything begins from. So 100% that credit rating is important.
Uh, of course, Dana has a different perspective because that's what I do. I used to tell my friend that credit rating doesn't matter if you're paying cash. However, if you want to do anything else, the credit rating is being used for. They basically want to know, that's their way of measuring if you're a person that's of your word. If you're not a person of your word, why would I extend credit to you? Why would I hire you? The job I had, I was responsible for managing billions of dollars. What kind of person would I be? Could I be trusted to manage the government's money when I couldn't even manage my own?
Mm.
So the credit rating is important, whether you're paying cash, whether you're buying a house, whether you're starting your own business. Absolutely. And speaking of housing, how much income should go to housing? Now, the housing could be rent or purchasing. So we can go both ways if you guys want to talk about that.
Okay, that was gonna be my question. We talking about the mortgage or we talking about inside the house?
We can talk about both. We just make the distinction.
Okay.
Okay.
Um, as far as your budget is concerned, trying to think, 30% of your income goes towards your mortgage.
Okay.
Yeah. Now, keep in mind when we talk about mortgage, which is way different from a rent, the mortgage, you have your taxes and your insurance, and you have maintenance that you wouldn't have to necessarily have to pay when you're a renter. And plus, let's not forget if you have a homeowners association. So, are you saying all those things is 30% of your income?
Correct.
Okay, so when the person does their budget, they have to make sure their housing, whether they're renting or whether they're buying a house, they have to make sure that all those expenses have to be accounted for and be no more than 30% of their income.
Yes, especially in the beginning, like say mortgage lenders, one of the biggest things they look at is your debt to income ratio, your monthly debt to income ratio. They're going to add up all your debts. They're going to subtract it from what you bring home, and that gives you that percentage number what they're looking for. Um, it should be, I think it was 20, 25%. And then when you put that mortgage in there, it should go up to 30, 35%. Um, that's a good range. I think that's somewhere around the national average, something like that. But that's a good range to put you in because they don't want to put you over 50 or more because then if something does happen, emergency does happen, then you are really in a bad situation because you're already spending 50% of your income, and then throw in your this is without your utilities also.
Good
So,
point. Good point.
so it's so much that can be thrown in there real fast if something does go wrong. So that's why they want to keep you in that 30% range as far as debt to income ratio, and that's with your mortgage because things happen, life happens, kids, everything. So that's what mortgage lenders look at, probably 30%, 35% range. They don't want to put you over that as far as your mortgage and your debts.
Well, let me ask you this. Has it been your experience, your lifetime, not necessarily as a realtor, but has it been your experience that the first time anybody's ever looked at their debt to income ratio is when they're sitting in front of someone asking for a house?
Yes. And I say for me, the big example, never really taught about finances until I was actually already getting financial stuff or in finances or in the military. I kind of learned at a later stage in my life, especially as far as credit and all that. I knew credit cards, but I never know, I didn't understand how much debt it can put you in. I was going out, like I said, keeping up with the Joneses, spending, 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 and then that bill comes at the end of the month. I'm like, oh man, I got to pay this. So far as credit history, credit reports, and scores, I kind of learned all that at a later stage in life. So I'm definitely was trying to keep up with that and looking at things totally different now.
Miss Ariel?
Oh, I listen. I'm over here. I was totally listening because I'm here for getting all the info. Talk to the realtor, okay? So I'm good. Like I'm over here, like taking mental notes. So I'm good.
Okay. Yeah, I think it's important that how early should you teach children about finances?
Oh, I mean, I don't have any kids as of yet, but I would definitely say early. I can give quick that for me as being a believer, I started at my grandmother. She started me like when I was 5, teaching me about tithing, teaching me about, okay, God gets your 10%. If I, give you $1, how much, goes to God. So learning, about that, and I'm frugal in more ways than one, but I, it was early. I think it should be early because if you're raising children that, oh, all we're doing is spending, all we're doing, money does not grow on trees, that type of thing, then you're gonna raise adults who think, okay, I can go ahead and spend. I don't have to have any type of balance or that budget or whatever the case might be, excuse me. You turn in from small children that just are every which way, and then you turn to a grown adult that's like, oh, I can do the same thing. So I think it would be early. I learned about money early. I learned about wanting, if I wanted something, let me save my money. You get that allowance. How much, is that? So having those principles at an early age have definitely helped me now.
Mr. Damon?
Completely agree with Ariel as early as possible because all those little lessons add up and it snowballs into a bigger and better understanding down the road. So I will say yes, as early as possible with little stuff like she said, tithing, allowances, and having the kids buy stuff and use their money and see that, okay, I bought this, now I don't have anything left. Now I gotta wait till my allowance comes back in. All that is different experiences and lessons that they learn and understand for later down the road.
Hmm.
One of the things I found out growing up is that as a young person, you're taught about money. A lot of times, you're not taught the proper way to manage money. So I think as you have eloquently put out, as soon as they start getting a little allowance, that's when the proper teaching should start as far as money management. And I think it should be a positive thing, not a negative thing.
Hmm. Agree.
Next question is, if applicable, how do you manage finances between you and your spouse? I'm not going to put Damon on the spot today. So, so I'll talk about how my husband and I did it. What we did was a um, we had two separate checking accounts. Actually, we had three. We had one checking account that dealt with all the household finances. Then each of us had an allowance that went to our respective checking accounts. And if we now, okay, don't laugh, but you got to keep in mind this was the 80s and 90s. If we spent or we were looking at doing a purchase over $50, we had to we had to check with each other. We had to get approval before we did it outside of our allowance. And what would happen was I would write the checks and my husband would sign them. That was our method. It worked. Both parties knew what was going on. We sat down every month. Well, even though I got paid on the 1st and the 15th, he was paid every other week. So we kind of had a schedule for our bills. But we had two separate checking accounts for our what we call mad money. Okay, Mr. Damon, you're on tap.
I completely agree with what you said. I'm also break it down to communication. Knowing where everything's going, knowing who's doing this or who's doing that, who's going to be responsible for this, who's responsible for that. A good communication, sitting down monthly, every 2 weeks, or whatever the case may be, whatever works for that family. But I'm gonna just sum it up and say communication. Communicate.
And hopefully the spender offsets the saver. Hopefully. You don't have, I think I would rather have either saver and spender or two savers. Two spenders can be a challenge, especially if it's not controlled.
Very.
Miss Ariel, what do you say when you get your spouse?
I uh, would definitely, I agree with Damon as well as you, 125%. Definitely communication because yeah, it's a whole that because you can miscommunicate some things, and finances was one of the things we don't want to have any miscommunications about. So, I definitely would say communication. I would probably, as for me, have that conversation early before we are husband and wife. I would have that in this seriously, like we're right teetered right there because I don't want to be blindsided by anything, nor do I want him to be blindsided by anything. So, and honesty, I think, and with communication, you can have honesty to say, you know what, I know sometimes I can be a little bit, wayward in my spending because I feel this way or something has happened or whatever the case might be. So, definitely that communication, definitely honesty, and as well as knowing, like y'all said, it's like we all know it goes here, David said it go here, we all know where everything's going. So I think that is, I'm taking mental notes once again, thank you guys.
You threw a good
Excellent.
one in there, honestly. That was a good one.
Yeah, yeah, definitely. So now good. We have five more questions.
Woo.
When should you start planning for retirement? Dana says as soon as you start working.
That's what I was about to say.
I agree.
Okay, well, we got that down pat. So as soon as they graduate from college or from their training, then they should be going straight to planning for their retirement. Now, when we say retirement, what do you think that means? I know what it means for me. It means that I um, am leaving the W-2 world. Now, if I don't even go into the W-2 world, that's fine. But I'm going from active income to passive in portfolio. That's what retirement means for me. And I have cash.
I would definitely say that. I would say that you're no longer you said that you're no longer working. You're making that you're on that road to enjoying the next chapter and journey of your life without that 9 to 5. So
Yeah. I'm
I'm
also
saying also saying the same thing. When you got that money out there working for you, and you're not working for your money every time out there working.
that is good. That is good. Okay. How much should you save for retirement?
Hmm.
that's a good question. A very good question.
We always hear the magic $1 million, but I will tell you that the reason why, in my opinion, the reason why they were saying $1 million is because back in the day, we were getting 8 to 10% interest. So what they were thinking about was, I'm living off of the interest of $1 million, which was comparable to what I was making when I was working. Dana's personal opinion is that you don't have to have $1 million to retire. You just have to have the cash flow that's comparable to your lifestyle.
Sounds like a good answer to me.
I was thinking the same thing. If you had that cash flow constantly coming in, I mean, it's gonna feel like $1 million because you're not working for it anyway. So, and you retired. I would say cash flow, same thing.
Okay, so we can agree that it's not so much a number that we're saving; it's the cash flow that we are trying to figure out that's commensurate with what our lifestyle is going to be.
Yeah.
Correct.
Okay, should you have debt going into retirement?
Hmm.
Uh, you never really want to have that, but it's going to be there. So I would say, should you know, but it's going to be there, but you should already plan for it also.
Absolutely. I definitely agree. Definitely minimal if you do have it. Like definitely minimal debt that like you can, take care of it.
Okay. Now, I'm not a big fan of debt. However, if the debt is part of the lifestyle I was talking about, if the cash flow covers it, you're good. You're golden.
Hmm.
Okay, we have two more questions, and I really appreciate you guys. These questions were coming in fast and furious. Um, what is generational wealth and why is it important?
When we start off, all right. I would say, I would say, generational wealth and why it's important. Number one is for me is knowing. I hear the saying all the time: know your why, know why you're doing it. One of my goals, know your goals. Also, one of my goals is to I want to make sure my grandkids are taken care of. That way, if that's my focus and that's my goal is to look out for them, I know everybody in between that is going to be taken care of.
That's good. That's so good. I would definitely agree. Also, I would say that generational wealth is that purpose for in addition for why we were put here. We were put here not to be alone, not to feel like you don't have any help. So just like Damon said, if I could help my grandchildren's grandchildren to be able to know that long after I'm gone, they still know, that their great grandmama was literally making moments in time in history with her finances, with her decisions that she made, that she thought about, that I would think about them, in the times to come. So definitely wanted to be able to make a mark in legacy, that I can be able to, say, hey, this is what I did. And so it's important because, we want to be able to have life that John 10 and 10 life, have life and have it more abundantly. That abundant life that, we want to be able to have, that's based upon that wealth, and not wealth just alone with money, but with, our soul, with, our family, everything to come together for us, definitely it's super important to have that overall wealth in your life.
Excellent points. I my opinion, my take on it would be, it's for me, it's biblically mandated for my children's children. So what I should be teaching my grandsons are how to provide generational wealth for their grandchildren, so forth and so on. Teach the teachers, if you will. And Lord knows we've been putting through some generational curses. Why can't we do general wealth with the same fervor, if you will?
Yeah.
So it's doable. And I think for me to be able to teach generational wealth, I have to know what it is, which goes to the last question. Are there any available resources to help, or classes that can be offered in the future to help persons achieve that generational wealth?
Well, I think you would be a perfect person to answer because they're on the Generational Wealth Now channel. And I know you are giving them resources weekly to be able to help them. You have a whole team, Damon, as well as some other awesome, amazing people that are on your team to be able to provide some great answers so that way, they can have this generational wealth. So,
Thank you. Mr. Damon?
For me, I would tell them to stay tuned and tune in. We got a lot of stuff coming.
Yeah, that is true. And one of the ways that people can do that is to like, of course, share, comment. We need to know what you need to know about, and also subscribe and hit the bell, because that way you will know, as my millennial mogul said, when that video drops.
yeah.
We do we do have some videos that we've actually projected out to the end of November through Thanksgiving. So we want to make sure that we give you good content. I have a fabulous team of experts. We have teams on the NexGen, and we also have people that we can actually reach out to for the things that we don't know. But the most important thing is family, our health, generational wealth, as we've always said, is more than money. It's leaving the world better than when we came in.
Absolutely.
Yes.
Any last words from the team?
This was awesome.
Mr.
Great.
Damon?
I learned a lot. And like I said before, definitely stay tuned in to everything else that's coming. Also go back, look at the blogs, read the blogs, good information. This whole sharing knowledge and growing ourselves is great.
Yes.
All right, everyone. Have a great week. Thank you all, and take care of yourself. Bye.
Good night, everyone.
Good night.